So we're absolutely delighted to have Guy Spier here with us today. He's a Zurich-based investor and the author of The Education for Value Investor, a must-read for any investor. Since 1997, he has managed Aquamarine's privately offered investment funds. He previously worked as an investment banker in New York and as a management consultant in London and Paris. He has an MBA from the Harvard Business School, class of 1993, and holds a first-class degree in politics, philosophy, and economics from Oxford University. On graduating from Oxford, he was co-awarded the George Webb Medley Prize for the best performance that year in economics. Thank you for joining us today, Mr. Spier.
Yeah, you can call me Guy Itai. It's a pleasure to meet you. And I should tell you that I recently visited Brown with one of my daughters, and you've got a spectacular campus there. I was really impressed.
Sounds terrific. Thank you so much. So maybe we'll start with, there's a lot of people that were interested in why you moved to Zurich. And I know you've spoken before about, that there's more sort of, I guess, calmness there, and it helped you get some more clarity when looking at investments. But why, I guess, Zurich specifically? Why did it appeal to you, let's say, more than other big cities in Europe, let's say?
Yeah. And, in retrospect, when I think of I moved to Zurich, I did not expect that it's not within 1 decade, but within 2 decades of moving to Zurich, the continent that I was on would be the subject of yet another war, a shooting war. I think we're all very shocked by that. And I can tell you, Itai, that it doesn't feel very good because it's on the same continent. And the idea that it would ever come to Switzerland is small, but it's still on the same continent. But if you have the goal to build multi-generational wealth, then you want to be in a place that allows for multi-generational wealth to be built. And if you've got a revolution or a war or something that's going to take all of that apart, it's going to destroy it. So that was motivational for me. And where can you do that? I mean, I think that Switzerland's a pretty good place. I think that the United Kingdom or London's not a terrible place either. And I looked at some other places as well, but I was really enamored with Zurich because of the size, because I was familiar with it. And at the same time, I was looking, as the chapter suggests, I was looking to create an Omaha of my own. And I felt like Zurich was a pretty good Omaha. And by the way, there are a number of very successful value investors who are based in Zurich, in terms of returns, far more successful than me. So somebody you should definitely interview if you can get him is a guy called Rob Vanel. He married a German woman, but he's in Switzerland as well, in Zurich, for similar reasons. How'd I do?
You did very well. And we were wondering as well if you can talk a little bit at all about Seritage growth properties. And I mean, there's a lot of sort of mall companies who, during the pandemic, their stock price got hit really hard. Why did that seem more attractive to you at the time, let's say, than some of the other mall companies?
Yeah. So you're inviting me to violate the rule about not talking about investments, but I'll have a go and hopefully it won't compromise my thinking too much. An investment that I had in the past was a company called Crostex Energy, and they owned gas pipelines in the sort of in and around in Texas, in these new shale gas fields, and they're extremely critical infrastructure, and they kind of like a bit like towers. Cell phone towers, in that most real estate you can only rent it out once, whereas these oil pipelines you can build on top of them. Once you have the rights of way, you can expand capacity, you can sell to multiple clients. So it had really good economics. And during the financial crisis, because of the way they were funded, the shares went from $30 a share to $2 a share. And the way it worked out for that company is that the company ended up being sold at $30 a share. But so it was it was one hell of a ride, not in the right direction. And obviously there were some things that I got wrong in the analysis, and I didn't get the business analysis wrong, but the way the business was funded was it was funded through these MLPs, and MLPs, the business model was good so long as the market for issuing new limited partner units was open. But when that market closed, the business model was, well, it appeared, I realized then that it was really very highly valued, and that I owned actually not the underlying business, but an interest in the partnership that ran the underlying business. What's my point, though, long term? So my point to you is that that's an example of something where I got a lot of the analysis right, but there was something that I missed. And as a result, I had one hell of a ride, but it didn't work out as an investment, but I ended up not losing an enormous, I didn't lose any money other than the opportunity cost. So if we move to Seritage, I think that there are a number of things that I have no doubt I've gotten right in the analysis. And one of the most important things is what your time horizon is, because you need to be able to be solvent for long enough in order for that to play out. And I actually have every confidence that that insight into the nature of Seritage's assets will play out over time. I realize that we're talking when the chairman has just resigned, and it appears that he's put up the company for sale. And I don't fully understand his motivations for doing that, other than he might just be tired, and he might be sick and tired of dealing with the Sears bankruptcy, and he just wants to. But it's also potentially a very interesting marketing strategy, because they have a vast estate, and it's very hard on a retail basis to get people to look at that estate properly. And so by hiring an investment bank and saying potentially the whole thing is up for sale, we'll get a lot of very, very bright minds and people with the resources to be able to put their hands around this enormous estate and make more sense of it. And so the game is not yet over. But having said that, I think that if I look at my analysis, and the underlying real estate is, I think, extraordinarily valuable and will continue to get more valuable. So this is not just general. This is not like St. Joe Properties, which owns vast acres of farmland. It's very specific real estate around some extraordinary locations, and everything, all economic. More than 99% of economic activity, maybe it's not 99, but 98 or 97% of economic activity happens within 1 or 2 or 3 kilometers proximity to major roadways. And Seritage owns a vast estate of real estate around these major roadways. So that basic insight is a powerful insight. I don't think that, obviously, I underestimated the impact of Amazon and the internet, and I certainly didn't predict the pandemic. And I think that, thirdly, what I've learned about real estate is, yes, the real estate is valuable, but it's extraordinarily difficult to repurpose that real estate. And I've seen that. It requires significant investment, and it takes time, and it takes the ability to permission things. So it's a difficult asset, but the game's not over. We'll see where it goes. I think the only other thing I would say is that when you look at other people's portfolio moves, what the person in your shoes and in my shoes has to keep in mind, and this is perhaps the most valuable thing I can say to the Brown audience, is you have to take into account what proportion of their portfolio is it? What proportion of their net worth? How do they manage their wealth? Do they manage their wealth in one vehicle and multiple vehicles? Is this 1% of their net worth? In which case, did they just take a flyer? Is it 100% of their net worth? Is it somewhere in between? How did they size the position? So, often you see a news story or somebody writes something up, XYZ person bought or sold this. And, there are sales that happen of companies where a well-known investor will sell a company. It's actually got extraordinary prospects, but they just have a better thing to do, or they're meeting with redemption requests and they prefer to sell that to something else. So there's a lot of noise in that data, if you like. So
yeah, that makes a lot of sense, I think. And one of your previous investment strategies, I don't know if you still use it, was to invest in maybe some of the lower cost commodity mining companies when they were more towards the bottom of the cycle. Are there any commodities that look interesting to you nowadays?
Yeah. And so I've come to the conclusion that I will never invest in commodities companies in my life. I never say never, so I'm not ruling it out completely. You never know what you might come across, but I think that, and I don't mind the fact that there are mining companies out there, and there are mining companies that deliver extraordinary value to humanity. So I don't want to denigrate any mining company, but it has, mining by its nature it can draw in all sorts of bad behavior and activity. So it starts with this company that I used to have an investment in, Potash of Saskatchewan, basically runs an international rigged market. So they manipulate the price of potash, and they have good reasons for wanting to do so. But if all the potash producers were in the United States, what they do would probably not be allowed. And the only reason why they could, or in any single country, and if all the potash producers were in the EU. So mining companies have the opportunity in certain commodities to kind of like to create a cartel, a pricing cartel. And they also have the capacity through those pricing cartels to manipulate the price to their benefit. So, there's a very clear concept in the mining world of a junior miner versus a senior miner. The junior miners are the ones that go bankrupt when the senior miners decide to crash the price. And because the senior miners have better access to capital, then usually it's the junior miner that will go under. And there are examples of people who've broken through that. So one famous case, which is another one that I was invested in, is Fortescue Metals. So there are some junior miners that become senior miners, but very few. And in a certain way, my perception of companies like Anglo American and in Switzerland, Glencore, is that they're a kind of a mafia, but a mafia that you want to be super wary of. Then there's the whole factor that any extraction of some kind of commodity or raw material, these commodities and raw materials often show up in places that the rest of us don't really want to go to. And in order to get the right to mine them, you have to engage in some pretty, sketchy dealings with people from foreign governments. And again, the people at these mining companies, they just say that's the cost of doing business. We have to do this. And so again, in the words of the Godfather, I don't want to begrudge. I don't want to judge how somebody makes his money. I'm not here to be a big judge, but I think that if I have the opportunity to make a success of my life without being involved in the mining industry, I think that I would do it. My most recent mining investment was in a company called Jordan Phosphates, which was based in Jordan, right next to Israel. And the investment, it was a bit like the Crosstex investment. It worked out. Well, it worked out for me not to lose money, or for me not to lose much money, but I didn't make any money. And I just realized that I don't have to do this, Again, people who make tobacco are making a legal product. They're engaging in a perfectly legal activity, at least they are now. But that doesn't mean I have to be in the tobacco industry. So.
Yeah, that makes sense. And you don't need to speak about any companies in particular, but how do you get comfortable when you invest in China with some of the political regulation there?
Yeah, so China is an interesting case for me that involves a certain amount of contradiction. So my friend Monish has been traveling in Turkey a lot, and it's public knowledge that he has investments in Turkey that the Turkish stock market gets very excited about. And I've told my friend Monish that, there's many other far more unlikely things that would happen before, or some very unlikely things that would happen before I invest in Turkey. And my word to Monish is, I don't want to invest in a country where the president imprisons journalists. And it's for a similar reason. I have friends who had, I don't know where it is right now, investments in Russia, in Sberbank, for example. At my recent Value X conference, somebody presented on a kind of a blue chip Russian mining company, which has got impressive, they own, well, it's mining, but they own some impressive assets. And Sberbank, for your interest, is the JP Morgan of Russia. This institution has been around since before the Russian Revolution, has survived so many changes in Russia, and has some extraordinarily high quality people working there. And what the kind of the rationale for investing in Sberbank is that, yeah, there are a bunch of crooks around, but everybody needs their Switzerland. So they all have to transact through somebody. They have to need a counterparty they can trust, and Sberbank is the counterparty that they can trust. But the country is run by, well, we know who the country is run by. And the question is, if the idea that the fish always smells from the head. So I kind of like stayed away, in part because I just don't, so if I buy shares of a tobacco company, am I killing people personally? No, but I'm somehow tainted by the connection to the company. And you might say, well, you own your shares, you don't have a direct investment in the company. But on another level, I do have a connection. This is all going to get to China, by the way, so I will answer your question. But so the same way that if I'm invested in a country where they imprison journalists, then on some level the tax revenues that my share in the company represents, that it pays, is kind of supporting that system. Do you really want to be there? So I haven't ruled any countries out as countries to invest in, but it's unlikely I'd invest in Turkey. It was equally unlikely that I'd invest in Russia. I certainly, now, even though Sberbank is trading at 0.5 times earnings, if you happen to want to, go move to Russia and buy Sberbank, you could buy it for 0.5 times earnings. So let's go to China. And so China, is not a free country and imprisons the Uyghur population, which is certainly human rights violations. At the same time, for me, it's a far more complex picture in China, because they have done an extraordinary job of lifting a vast number of people out of poverty. And while it's not a free country in the way that I would describe as free, millions of people travel from China and voluntarily come back to China. So it's not so unfree that people once they've left never go back. And I think that where I come out on in China is that it's on a path. There's a commitment by the Communist Party of China to make the country a better place. They're working for the common good, and they have a way of doing it, which is not our Western way, but there are many things that they've done in China that people in the United States would have loved to have done. For example, restricting gaming on children, or restricting tutoring companies that are basically just help people jump the line to get into educational establishments. So they've achieved extraordinary things, and they are continuing to seek to deliver for the overall population. Now, does that mean that they're not committing human rights violations against the Uyghurs or against press freedoms? No, they are. So it's an imperfect country, but I feel like it's on a path to somewhere good. And then I think that it's really important that in the countries where you invest, if you're investing in China, if you're investing in a business that is not win-win for all concerned, like the tutoring companies, then you could get your head handed to you. But if you're investing in a company that is genuinely building the Chinese civilization and global civilization, then maybe some risks are mitigated. Excuse me, I got a yawn because of jet lag.
And you spoke a little bit about Israel. Have you found opportunities in the Israeli stock market attractive in the past?
I mean, I think that there are certainly companies that I've missed that I ought to have taken a closer look at. One's Matronics, another was SodaStream. Another is I've blanked on the name, but they have they do payroll systems for an increasing number of Israeli companies. I think that I'm wary of Israel. First of all, I have a personal bias towards the country because I spent some of my life there. But at the same time, many of my investors have nothing to do with Israel. And so I have to find the best investment opportunities for my investors. And as you got from an earlier part of the conversation, I'm very focused on building multi-generational wealth and building the fund up into something that people can count on and rely on. And I think that what may well take out our investments has got nothing to do with the quality of the analysis, but some awful global event. Like, it doesn't matter how good a business you invested in Ukraine, but your neighbor happens to be Russia. So there's just an unfortunate and inevitable country risk that exists for Israel because it's a small country in a nasty neighborhood that does not exist for the United States or for China or for India. And so the combination, excuse me, the combination of those things has made me, it hasn't brought me to pull the trigger, but that doesn't mean that I wouldn't in the future. And the safety and stability of Israel is certainly has changed drastically, and especially with the, with the Abraham Accords, it's gotten even better. But my goal, I also have Israeli investors who don't need me to help them invest in Israel.
Yeah, that makes sense. And also, how do you look at, I guess, investing in Japan? Is your framework there different at all than investing in other countries? Because there seems to be a lot of things that, maybe look very quantitatively cheap, at a discount to, their net asset value or a cheap earnings multiple. But, it seems like there's been a lot of value traps there for even decades now. So how do you look at investing in Japan?
So look, nobody's telling me I have to invest in Japan. I don't. So, and there was a time when Monish talked to me about these net nets, and they were net nets. And they do work, by the way. But what I found was that it was a lot of work because you have to keep recycling out of the things that you have into new ones. So you get your 50% pop, and then you have to sell that one and buy another one. And so that's quite a bit of work that I was less interested in doing. I think that also something that happens to all of us who invest outside of our home country is that we just take the things we don't know and we project what we think we know into them. So this was the case with the people who tried to do activism in Japan, and they just assumed implicitly that the legal system in Japan would give them the same rights as the legal system in, say, the United States. This is not because I'm really enjoying talking to you, it's because of jet lag. I apologize. So it's funny because I've got some. I just heard a presentation the other day by somebody who was talking about a spectacular Japanese company, which is, it was not quite Rakuten, but that kind of business. And so China has some really interesting businesses in it. It's also an aging country with an aging population, and obviously has these kind of like factors where capital just gets trapped and people are fine for the capital to stay trapped there. So I think it's good for the citizens. I think the citizens live good lives, but is it the best environment for an investor? Yeah, I'll give you another country like that. France is a spectacular country, and I've never had an investment in France. I think that the way France is put together, it's just harder to find companies that earn the kinds of high returns for shareholders and that are so shareholder oriented the way I'm interested in, and the way would do well for my investors. But the country, by and large, I think France does really well for its citizens. I mean, people are really happy in France. And so some countries are less susceptible to kind of Anglo-American approaches to capitalism. I think Japan is one of them.
Yeah, that makes a lot of sense. And you've spoken about in the past how there's sometimes a divergence between what Warren Buffett says and what he actually does. Can you give some examples of that?
That's true. I have said that. And it was told to me by a guy who was a senior insurance executive at National Indemnity, or one of the insurance companies. And so he was a very close observer of Warren. And I cannot say that anything is coming up for me right now. But I think that in general, it's a really, really good rule to follow with anyone, because there are many reasons why somebody might say something but not act on it. And I had some. I don't know that it was scurrilous, but I in a couple of videos I talked, not extensively, but I talked about cryptocurrency, and that I was divergent to Charlie, at least, on cryptocurrency. And I kind of knew that would make people sort of go, "Oh my God, Guy Spier talking about crypto." But and there's some guy who created a video that's like, Guy Spier gets into crypto, Guy goes long crypto, and the fact of the matter is I don't own any crypto. But that's what they heard. And I think, by the way, I don't think it's smart for somebody like me to do that too often, because you're kind of misleading people. Well, I'm not misleading people. I'm being honest. I was just talking about crypto, but at the same time, I was kind of yanking people's chain, and it's better to speak in a more sincere way about what one's up to and not do that. But I do think that Warren Buffett, as a prominent person, it's often easier to say something even though you're not doing it. And yeah, I'm sorry, I've blanked out. There was an example, but maybe if I have it, I'll come back to you and you'll put it in the show notes. So.
Sounds excellent. And you've spoken, another sort of investment strategy you have is looking for geographic follower investments, where maybe you have a very strong business model in one country, and you're looking for if you can find a company that has that type of business model in, let's say, a more emerging country or in another country. I think you've spoken about some of the credit rating agencies in India before, but do you have maybe other examples of these geographic follower investments you've made?
Yeah, I mean, look, so I'll give you one example is the exchange business, stock exchanges. So it's an extraordinary business, and it's kind of a call on all the stocks that are traded on the exchange. And it's very inflation protected and has extremely high returns, highly regulated. It's very hard to replace the exchange. And so, you can just look for exchange companies around the world. You can look at credit. So there's corporate credit ratings, and there are some ratings companies based outside of the North America and Western Europe. And then there are personal ratings companies. So people give personal credit scores, companies in the US like Equifax, and those tend to be kind of interesting and pretty good businesses. And then, in a certain way, all branded goods are like that. So look, some branded goods are kind of like global brands like Mars or Kit Kat. But once you've understood that branded goods is a good deal, I mean, there are some incredible, I mean, the investment that I had in Itai, the Chinese liquor manufacturer, was completely based on my understanding of brands in the United States. So, but I think that also the world has changed. I think that when I started doing that, there weren't that many people doing that. I think now all of that knowledge has been, I was sitting in New York and I was like, oh my God, credit ratings are good businesses. And so let's go look for credit rating businesses around the planet. Now you don't need to be sitting in New York with my background to be able to do that. And so a lot of people have done that. And so I'm not sure that I think it's an example of an idea or an approach to invest that worked for a while, but is probably not a useful way to approach anymore. I think also, Itai, I've become more selective, both in terms of countries I want to invest in and in terms of the kinds of business that I want to invest in. So, I used to have an investment in a Filipino company called Alaska Milk. There's a phenomenal brand, 98% market share. And I hope that I would actually do that investment again, but I'm not even looking now. But yeah, so I'd be far more reluctant to kind of apply that kind of reasoning, and my view is that you can't just be Walter Schloss 30 years after there are very few nets left. You've got to keep updating your thinking, trying to figure it out,
Yeah, absolutely. And I know that you've spoken about in the past, we've had interns. I don't know if you have any interns right now. What do you look for when you hire interns? And also, what is your internship process like?
Yeah. So I'm not very good at employing people. In fact, my phenomenal assistant, the only reason why I managed to get her to working with me is that somebody else did the hiring process, because it's well documented that many people are just because they look to find somebody that's just like them. And that often doesn't work when you're building a team of people who all have different skills and bring different things to the table. So, and I came to the conclusion a while ago, certainly at the time that I wrote my book, that I didn't want full-time analysts. At the same time, so there's a part of the kind of internships is, I think it would be wrong for me not to try and create opportunity for people, opportunities that I lacked. Nobody was interested in having me around their financial institution, but I've taken a certain amount of pleasure from, but there's a very small number of people that I can do that with. It's kind of like, I wish I could say there's a process, but it's kind of like random, and excuse me. And part of what happens, I think, is that these interns, the ones that I'm creating an opportunity for them, they come for a very short period of time, like 2 or 3 weeks. So I think the 2 or 3 weeks is enough for them to learn a lot, and it becomes quite tiring for us. I think that when it comes to bouncing ideas off people, I kind of don't want that person to be my employee, or I don't want them to be my intern. And I kind of find those people through running my own podcast series, through running my ValueX conference, from sending research to people. And in a certain way, that's even better because it's free. At least I don't have to pay them a salary, and it's on demand. So I mean, on the other side, it's on demand, but only when they have the bandwidth to deal with me, and they may not have the bandwidth. But then also what I've been learning is that there are many aspects of the investment research that I do that can be turned into a process. And then I can pull somebody in who's not just the ultimate creative, analytical business mind, but somebody who's actually enjoys fitting their work into some element of process that I've created. But I can't say I've done a very good job of it. I think that different people also have different destinies. Some people want to build big investment firms, and some people don't. And I think I'm in the category of somebody who doesn't, I don't have the skills, and I kind of don't, it's not what would give me joy, if you like. Yeah.
Yeah, that makes sense. And what's your advice to students on making their investment checklist?
Yeah. Yeah. It's really straightforward. Look for every mistake that you've made, look for every mistake that other people have made, and try to find what was available to be seen at the time that you or they made the investment, and then add that to your checklist, And so, I mean, you can imagine, I've had one bankruptcy in my portfolio, and I did not pay attention to how the leverage had built up at the company as it unfolded. So, checklist items about leverage is really important. There's something I describe in my book, this management team of a for-profit education company where one of the management team was going through a nasty, bitter divorce. And I kind of realized that when people go through nasty, bitter divorces, it's all consuming, and the probability that they can make rational decisions around their business or their role as a CEO and as a custodian and fiduciary of the investor's money was far less likely. So I added the checklist item: is the CEO going through a nasty divorce? And so each one of those, and in a certain way, adding a checklist item can be cathartic, because it kind of expunges the pain of the mistake that you've made. But then also to look at other people's mistakes. I mean, for example, one of the lessons for me, I mean, we'll see how the investment unfolds, but a lesson for me in Seritage is, when you assume that a change is possible, for example, repurposing retail real estate to residential mixed office, that's fine, but what's the cost of doing that? If the cost is 1 or 2% of the value of the asset, not a problem. But what if the cost is 50% of the value of the asset, or even 100%? And so that's so there's a few checklist items, but it's pretty straightforward to do it, actually. And I think that there's far more benefit to doing it yourself than getting somebody else, just taking somebody else's.
Yeah, absolutely. And what's your advice as well to, let's say, students who aspire to start some sort of fund in the future? Sort of maybe, how do you know that you're ready, or how do you know that you think that you're ready? What's sort of your advice for raising capital? What are some of the major, challenges that you went through?
So, in terms of being ready, I've met people who are as capable as I am to run a fund, but they will never be ready, and they think that they're not ready because they need to go learn, but actually for some reason they just don't have the self-confidence to want to go and do it. And so those people in a certain way will never be ready. They keep saying, oh, I need another 2 years experience, I need to go and work somewhere. And no amount of me telling them, look, yeah, go work at XYZ firm, it's not going to help you when you start doing it yourself. But then on the other end of the spectrum, you have people who are overconfident narcissists who think they're God's gift to humanity. And those people, they will end up doing it whether they're, quote, ready or not, or whether they're appropriate or, and they may succeed and they may not, who knows? So, so I think that, so I think that if you think that the latter applies to you, then you probably need to kind of like go talk to somebody who can help you with your narcissism, because at the end of the day, none of us are God's gift to anything, and the market will hand your head to you multiple times in an investment career. I think if you're the other end of the spectrum and you might be ready, but you never feel like you're ready, that there's also an element there where the person might have to recognize that they're just not cut out for this, because it does require a certain amount of willingness to believe in oneself, even though you don't have all the evidence to know that it's going to work out for you. And then if you're somewhere in the middle, which is, I think, where I was, is this kind of like keen appreciation of the risks, keen appreciation of the consequences of failing, while at the same time a desire to move forward with it, I think is probably the place which I think would be the healthiest place from which to move from. I think that, look, I got into doing this with zero investment management experience, and I don't think that it was the end of the world for me. I think the burning desire to do it is probably a good thing. I also think that it's a question of what resources you have available at your disposal. I don't think that I knew that, my father and 2 former partners of his had a problem. They had cash in the bank and it was being managed really badly. And I thought to myself, I can help them with that. I don't think that if I didn't think that I could get access to that pool of capital as a starter to start my investment business, I don't think that I would have either been capable of raising the money. I don't think I would have wanted to raise the money. I think that initial capital gave me the kind of buffer to be able to work at getting it right. So I think that often, what's really important is hidden. What's important is not whether XYZ person bought or sold Seritage, it's what proportion of their portfolio is it? And in this case, whether you're ready is in huge part, if you have a pool of committed capital that will stay with you for 5 years or more, that you can live comfortably managing, either because it's a sufficiently large size that you can draw a modest fee and live from that capital, or you have maybe another source of income, then you might be ready. But I actually, if you're somebody who wants to raise the money, then I think that, I don't think that life is much fun living with big ideas, but having to convince other people to put their money with you. I think that my response to somebody like that is to say, you know what, go get some financial success with maybe not your big ideas, but something that works for you. And once you have the money in your own bank account, then go have your big ideas and do whatever you like with it and demonstrate and prove. But you know, if somebody listening to this is like, yeah, I'm going to go raise a bunch of money, I think that the people who deserve to receive money, they often will have investors approach them unsolicited. They'll say, I'd like you to manage money for me and my family. I mean, that's what happened to not Stanley Druckenmiller, another famous investor whose name's just gone out of my head. But he invested for the Bass brothers. Very tragic story, because he developed a disease that I don't remember his name. He was pretty famous at the time. But so I think that, you know, you're ready. If you have a committed pool of capital that's staring you in the face and saying, please manage me, then maybe that's the best indicator that you're ready, you know. And then don't turn it away.
Yeah, that makes sense. And do you find that screeners useful at all, whether they're either quantitative screeners or keyword screeners in a research process?
You know, I haven't done much keyword screening, although I think that the Bloomberg monitor now has access to it. It's an interesting idea, you know, and I'd be curious, you can email me afterwards, you know, there are probably some interesting word combinations that one could look at in conference calls that unveil something unusual. I think that, you know, there's the concept that perhaps you're already familiar with. If you are, sorry, and if you're not, it's great concept. The idea that an idea screens well. So that's, you know, it looks good in the screen, but it's not actually a good investment idea for all sorts of reasons that don't show up on the screen. So I think that's a real problem, and is the reason why screens are never going to work consistently, because even if they did, whatever informational advantage you get from the screen, or whatever investment advantage you get, is going to be arbitraged out, because anybody can, it would be pretty straightforward to replicate that screen. And so, you know, a screen for anything is going to miss all the things that don't screen well. And I think that we live in a world probably where most of the best investment ideas don't screen well. Having said that, I enjoy running screens, and I do it, you know, every 1 or 2 weeks. I will run one screen or another, and they're saved on my Bloomberg monitor. And I enjoy seeing what comes up and then going and taking those companies and digging in and trying to learn more about them. And I do that on a regular basis. And one of the ways in which I try to adjust or for the fact that screens don't work well anymore is that I do so many of the best businesses over the last 20 years screened appallingly. You know, you wouldn't found Amazon on any screen, but you would have seen that Amazon was growing its sales per share at a pretty rapid rate while not diluting the share base. And so, you know, two numbers that I think are very interesting to me are sales per share and just simple share count. And I enjoy looking at companies that have increased sales per share while reducing their share count, you know. So what have they been up to? They're obviously parsimonious with some of the key. And what's great about those two numbers is that they're not very easily manipulable. So when you look screening in terms of EBITDA, you know, whatever, net income, all sorts of manipulations that can occur.
Yeah, absolutely. That makes a lot of sense. And I want to be respectful of your time. So for a concluding question, what were some of the most influential events in your investing career?
Influential on whom? So
influential for you.
So kind of consequential events.
Yeah, yes,
you know.
Exactly.
So, you know, I mean, obviously I wrote about it in my book. Lunch with Warren Buffett was a huge deal, and a huge deal because it changed my thinking. Even though I was a student of his, the experience of going to the lunch really did make my life, put me onto an even better path. So I would argue that meeting Monish Pabrai was an equally extraordinary event for me, and it taught me so much about how to run a business and taught me so many things that I didn't realize were true, that were true, that I needed to act on. I was, with my, sort of like head up my ass, Oxford education was not going to get to, and Monish helped me to get to that. So, publishing the book actually took my eye off the ball on the portfolio. So it was a kind of like a kind of a seminal event for me in terms of, hey, I published a book. But shortly after that, Horsehead went bankrupt. So I didn't have much time to enjoy and that was a seminal event for me as well. I mean, I ended up working for 6 months, best part of 6 months, doing everything I could to try and recover the investors' money, and I failed, but it was something that I knew I had to do. And so I think that ultimately, because I worked so hard at that, it was in some places it actually enhanced my reputation. People said, "Oh, this guy is willing to fight to the end," and I fought until there was no more opportunity to fight what was happening, which I thought was particularly wrong. Another seminal event for me or consequential event was coming across Duff and Phelps credit rating. I think that a huge part of my investing life has been around credit rating agencies. Then I kind of like the business. I mean, if I was not doing the job that I'm doing, I kind of wouldn't mind working at a credit rating agency. I think it'd be kind of fun. And so, that shaped my thinking a lot. That was an early investment. It was just a phenomenal company. It was called Duff and Phelps. It was a spin-off. They did all the right things. They had very high return on invested capital. They bought back a lot of shares. They had this guy, Paul McCarthy, running it, who was very parsimonious, but achieved extraordinary results. They were opening offices around the world and doing really well at opening those offices. And then that made me want to look for other businesses that had similar qualities. So there's a few.
Yeah, that sounds great. Thank you so much. This is a terrific session, and we really appreciate you taking the time out of your busy schedule to speak with us today.
Itai, it's a pleasure to meet you, and it's a pleasure to meet all you Brown students. You're an extraordinary place. Enjoy your time there. And I would just end on a quick sort of like one of the, in my Harvard Business School classes, there were people from different colleges and universities, and I got to know a number of people from Brown. Brown people were intellectually self-confident, smart, but also extraordinary team players, way better. So there were people probably the best team players. I knew that if somebody had been to Brown, they were more likely to be willing to work on a team. It's something that I don't know if it's they select people like that, or they teach you something while you're there. But anyway, there's something about Brown. I would love it if my daughter went to Brown. I don't know if she will, but I'm more enthusiastic about Brown than she is. But beautiful place.
Yeah, thank you so much. That means a lot. Thanks. Have a great day.
Yeah. Great to meet you. Thank you.
Great to meet you as well. Thanks.